So welcome to Wednesday live training session. Now the sound should be okay, and I'm pretty much fine. Thank you for your questions at the beginning of the webinar. So have in mind all risks associated with Forex market. If you want to trade with me, you need to accept the risk disclaimer and proceed further. Have in mind, CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. And this video is not part of the .co.uk website, but the globalnews.com website. We already have an order activated. I need to show you. I have a $CAD buy trade activated. At this point, you can see here, $CAD trade was activated, 32.79. You could have entered a bit lower, but here this is my market order, and this is, as you can see, pretty much bullish trend. We have 3 consecutive days of bullish price action. We have a trend line here. Even if the price goes lower, our stop is let's say 40 pips, but you need also to count the risk inside it. The matter of the fact is, what is the most important thing? It is the risk, guys. So you need to always go with lower risk, because you don't know what might happen with a trade, because you don't want to gamble, you want to trade, right? And if you go with lower risk, the chance is that if you lose a trade, it will still be good, because you can recuperate much faster than if you had actually a big risk trade. So as I said, we are currently in a buy position on $CAD. The entry 32.89. Stop loss is 32.40. The POC zone is around 32.69.70 here. So still, this is a bit ranging price action, but well, I think that this price could go up, because we also have a bullish pattern here. This is a bullish U-shape pattern that also happened very close to support. So we might call it a rounded bottom also. So let's see how the trade will develop. $CAD buy trade, and definitely it has a potential to go more to the upside. So let's see. The TP, final TP for this trade will be, of course, ATR projection high, 33.40, but have in mind that it's also close to H5, so I wouldn't go behind it. The thing is that with $CAD, the price is a bit, up and down in last couple of hours. But the thing that I can see here is that it's above L3, and the price already broke above H3, went below, then went above. So that indicates bullish pressure in the market. You know how Camarilla is traded. If you watched my webinars on Camarilla, you know that this is my favorite indicator. And I know a lot about Camarilla. I think I know so much that I can write easily a book about Camarilla, because I don't use it as 90% of the market uses Camarilla. I use it for POC zone, for confirmations, for continuations, and for reversals. So of course, market is volatile, and market can always make a false move, right? When you see that move is false, we usually call that a stop grab. Stop grabber pattern, you need to understand what stop grabber means. I will give you an example. Stop grabber is not that broker hunts your stop losses. I know that there is a lot of talk and a lot of chit chat on the internet that says that actually brokers hunt your stop losses. I need to tell you that if the broker is regulated and You know that I trade with Admiral Markets because I've been long time with them, and I also I know that they are fully regulated, and I can easily deposit my money. What I already did, and I'm sure that my money is safe. And other markets will never hunt for stop loss. The stop loss hunt was the practice that so-called bucket shops did in 2008, 2009, 2010, 11, up to, let's say, a couple of years ago. But now, as you can see, regulations in financial markets are always being, how can I say, they're always more strict. They're they're getting, each year they're getting more strict than they were like a year or 2 years before. So fully regulated brokers do not hunt for stop losses. What happens is stop grabbers. Stop grabber is a pattern, and it does not have anything to do with any stop hunt. It's simply a down move or up move that collects stop losses, weaker stops on intraday time frame, and price proceeds with momentum. So let me just show you stop loss for this trade. I'm monitoring it, but I will put it at 32.40. So I will do it immediately. Stop loss for this trade is 32.40. Let me modify. So stop loss 32.40. Okay, so this is stop loss. Okay, now let me show you that stop grabber pattern. We need to open pound dollar chart. Pound dollar was basically in uptrend. And what happened yesterday, or yeah, it happened actually just after the announcement that Bank of England, or BOE, is not ready to go with rate hikes. And this is what caused this stop grabber. You see, this was master candle. Master candle had 4 candles inside. It was confirmed, but there was no breakout. But breakout happened after the announcement that Bank of England is still not ready to do any rate hikes, right? So when it happens, you see there was a big move to the downside that collected all stops that were placed here. Weaker stops were placed here. I'm now showing you where weaker stops were. Okay, now follow me closely. When price collects all those weaker stops, like this, it makes a stop grabber. This is stop grabber, you see? Now, every single close of a sell position is automatic buying to the market. This is where all these stops have been collected. They were all closed here at this point. Market proceeded with the retracement to the upside because there were all those weaker stops were closed, and then fresh sellers jumped in. Do you remember my trader's tip on Facebook page? Let's say a couple of weeks ago. I said, always try to sell the first rally after the low of the day has been broken. This was the first rally the price was sold. Similar is whenever we see a buy stop grabber, whenever a high of the day is broken, okay, we can actually buy the first retracement. Usually that first retracement into the trade that has broken a daily low or daily high will give you pips. So follow my advices on Twitter, and also when I post on Facebook, traders tips, pay close attention to that. Okay, those things are important for you to understand. So this is what happened today, guys, on the GBP dollar. In the morning, price went down, broke this low, then again it was sold and made a new low again. But because of the good news for GBP today, pound broke daily high that was here on lower time frames. Let me open 15 minutes. You see, on lower time frames, it made just a very small retracement here, but then broke that high again. That was a signal for a big move that might happen with the pound, and that actually happened. So today's day on the pound is bullish, and I already said pound dollar is a bit, I need to say, it's a bit volatile now because Brexit negotiations, all those things that happen with BOE announcements, but still it follows technical levels. Okay, so the trade that we currently have is dollar CAD buy trade. I made a live call at the beginning of the webinar, 32.79. That is, guys, why it's important for you to be at the very start of this live trading webinar. This is not after the fact. This is right moment, now moment, before the fact webinar. So the trade is already 10 pips up. So you see, this is what we have currently on dollar CAD. Okay. Now, let's see if we have some questions, a lot of questions. Are you still in euro long? Of course, Paul, but I'm long on my other account, swing account. Yes, I'm long, and I still think that euro dollar is having currently an upside momentum. Question: what is your Facebook page? Well, you can always find me on my Facebook by Tarantula FX. My name, surname, and Tarantula. It's easy to find me. The question: dollar CAD is stuck under daily classic pivot EMA 200. I don't know, Egils. I don't, there are a lot of different methods and systems in Forex trading. I don't look in my Camarilla MACD trading. I don't look at EMA 200. Really, I don't need. I don't need it. I trade differently. I use other tools. I don't use anything that is written on the internet freely, because all those free informations that can be found are usually not that profitable. They can be profitable from time to time, but I'm sticking really to my own method that I have developed, and that is called Camarilla MACD. So all these bullish rejections could actually make something out of it. Let's see. Let's wait and see what will happen. 10 pips at this point, but the price still has the room to the upside. Let's see if it breaks. If it breaks this high here, I think it will have a positive momentum to proceed to the upside. Next question, Rohan is asking, Nenad, how would you identify if it's up day or down day on that day? I don't particularly look simply if it's up day or down day. I need to look at the exact levels of support and resistance. And Rohan, that is one of the things that you really need to manage yourself. First, if you see that there was let's use pound dollar. Yesterday, there was a very, very big drop here. You see, huge drop that broke almost without a retracement. So you don't know. So that is important. Reaction is important. Up day starts when market breaks daily high. If it makes a small retrace and breaks that daily high that has been just established, that means that it's up day. This indicator that I have, it's called Elite Currency Box Indicator, and it tells me that it is whether up day or down day. Down day is when the box is yellow, or this color that is close to yellow color, and update when the color is light blue, like this. And it's very, very easy to identify up days or down days, but the biggest problem lies in action, reaction. Whether you will trade the move or you will skip it because you are afraid to go with a possible counter trend. So it's always good to watch levels of support and resistance. So for that reason, we are currently in a development also on multiple time frame Camarilla indicator, and that indicator is still being in development. We are also clearing some bugs in the code. Of course, it has some time until we finish it. But here you can see market has touched weekly L5, okay, daily L3, but it's weekly L5 what is important, and also ATR projection low. So when this level was hit, I thought that it is the time that price will retrace. I didn't take this trade, but it doesn't matter. It doesn't matter. We don't need to trade every single setup that market gives us. But just watching weekly Camarilla levels, that are coupled with daily levels. So daily L3 support, weekly L5 is strong support. ATR is low here. We don't go short, guys. We go long, actually. So that is when positive news from pound actually translated into the bullish price action. So at this point, I think that GBP dollar, if it breaks this daily H4, it might get into this range. It's called master candle range, and if it breaks it, it will go more to the upside. Okay, that is what I think. Okay. The question is what I think about gold. This is gold, okay. It's still at support. It's trying to reject support. So if this is what can happen, if support holds and next candle breaks the high of this candle, I think gold will go up. So here, you see, we have double bottom here, and we have daily L3 support. I still think that this support is slightly stronger because this is weekly. But it does not mean anything in this case because this will be double bottom, daily L3, and next candle is important. If this candle closes above daily L3 and next candle breaks the high, I think this market can go up. It can go more to the upside. Okay? So that is what might happen. Okay? So dollar CAD. Now I will show you dollar CAD is rejecting. Okay, now I will actually open dollar CAD chart because this is the range. It might get lower again. So I will buy this trade. You see, it's being rejected again. And I will actually protect my trade. Now at this point, I will put my stop loss at 32.87. So that means that I have secured only 9 pips for this trade, but it also means that if the price goes down again, I will buy it again. Okay, because I bought it slightly higher than my original POC zone was. My original POC zone was actually at 32.70, but I bought it at 32.79. So if it hits my stop loss, okay, now I will secure some 8 pips. Okay, this is how I do it. It's very easy, and I do it from time to time when I get a slightly higher entry. So now I have actually secured some 9.5 pips. And if it hits me here, okay, I will buy it again. Have in mind, guys, that I trade with very low risk. And I also trade on 100,000 euros account, okay? And the thing is that that account is also very, very low risk. I can actually show you the statement here. And the point here is, okay, this is, let me show you. This is my personal statement, okay? So here I am a big, big follower of low risk trades. So you can see here, the account is 2 months old. It's already 1.23% up with only 5% of drawdown. Okay? So what it means, guys, is that actually the point here is that you need to trade with a low risk unless you want to have, well, a possible psychology gambit where you can lose a lot. So always go with low risk. Here, I actually am stopped at 32.90. So I made 11 pips from this trade. Okay, 11 pips from on my trade, and I closed it simply because I went higher. If this candle or next candle goes slightly lower, I will buy it again, guys. Okay, but it needs to happen in next 2 hours. If it doesn't happen, no trade. So live trade was closed for 11 pips. Okay, 32.90 was my profit stop. You see, it goes again up. I don't know, maybe you want to protect your trade now if you traded this with me. If not, it's up to you what you want to do. But I will buy it again. That's for sure if it drops. Okay. Let's see one more potential trade. Okay. I'm monitoring the charts, guys. So really, it's very hard to now. Just give me a few seconds. There could be a potential trade setup also on. I don't know. This looks like it could go up. It's actually Euro New Zealand. It could go up here, but Euro New Zealand stop loss could be bigger. Now, okay, this is Euro New Zealand. You see, and there is New Zealand news today, so this could be a trade that should happen before New Zealand news, and this looks like potential upside here. It's very close to this support. Let me see, maybe we can buy this. Maybe we can buy this trade. Give me a few seconds. I'm currently monitoring it. We have the zone. It's not a big retracement. It's close to 38.2. It sits exactly at the master candle. The price is still above master candle. It has the potential to go to the upside. It also broke through daily H4 today. The only thing that is bothering me is New Zealand dollar rate announcement today. So again, we can maybe go, but you know, Euro New Zealand is more volatile than other pairs. So I'm still monitoring this potential trade. And this is also a form of head and shoulders inverted. And the ideal entry was actually here. The ideal entry was here. And if we do this trade, this could be a stop loss here. Yeah, this could be a stop loss here. Slightly, I would go with potentially long trade slightly lower. But let's see. Let's see GBP New Zealand. Now, it's in the POC zone. Yes. And we already know that it's equidistant channel here. Okay. So this is the POC zone. Master candle previous range is rejecting. Yeah, this could be, but still, this should be done with tight stop loss, but I'm not really sure. Now the pound is going up. So if the pound will break this DH4, it might push pound New Zealand up. We are still monitoring the trade. Maybe we can trade it, but let's see. Let's wait. Okay, and I also have another setup that could happen here. Yeah, this is what I am still waiting. If the price drops, I will buy it. And my live entry was closed for 11 pips. Paul, the question, can you explain quickly, you had 40 pips stop and take profit 11 pips. Why? Because my entries are 80% accurate. 80% accurate. And one of the reasons why I closed dollar CAD trade prematurely was because I went higher with my entry. I wanted to make a live entry in a form of scalp swing. And if you do scalp swings, you need always to know that risk to reward is lower than if you make positional trade. Okay? What it means is if you want to make a scalp swing trade, you usually take 10 or 20 pips. But your stop is usually 30 pips. Stop loss is not important, Paul. Traders simply don't understand the logic. And I can give you a quick update on my thoughts about that. And I've been trading the market for, it's almost 10 years. Very close to 10 years, fully. What I have noticed is that a lot of traders who never ever showed any statements or any live trade keep claiming that risk to reward is the only way to make money. I can strongly disagree with that. Because the main thing is the risk. If your risk is 1%, you can make 100 pips stop loss and take 20, 30 pips. If your risk is 1%, you can take 15 pips with a stop loss of 45 pips. The point is, stop loss is dynamic. Risk is fixed. So you can make 200 pip stop loss with only 1% of a risk. That is what you need to understand. And if your entries are 80% accurate, and mine are, according to my calculations, I am close to 70% accurate entries on live accounts and 80 to 90% accuracy on my analysis. That is why I'm profitable. So I can afford a stop loss of 30 pips and take profit of 10, 15 pips if I do scalp swing trade. If I make positional trade, then I would do 32.70, stop loss is 32.40, and let's make at least 20, 30, 40 pips, right? But I entered here 9 pips away from my original entry. So I couldn't have qualified my entry as positional. My entry on dollar CAD was scalp swing trade, not scalp trade, but scalp swing. And simply because of these sellers that appear here again, I decided to protect my profit. So that is, I hope, what really, if you try to just think that risk is what matters in the market, not risk to reward, then you are on a way to be a profitable trader. I know a lot of institutional traders who make 300 pips of a stop loss just to take 50, 60, or 100 pips. But their risk is low and their accuracy is high. Also, have in mind that you can always try to reverse your trade on a breakout setup. So let's say that you made this trade and it went down. You can always add 1 or 2% more of a risk to enter a breakout trade below the stop loss level here. And if you make it, you will earn profits for the day. If you lose it, you will only lose up to 3%. You need to understand the risk. Without a proper risk understanding, there is no way that you will be profitable in the market. And I have learned it through years and years of experience. So Paul, that is my answer to you. Scalps, scalp swing, positional trades, counter trend trades, breakout trades are different setups. Every setup has its own stop loss, risk adjustment, and potential different lot size according to the account traded. So you see now it's going up, but I don't, I'm not, I don't grieve anything. Let's see, Euro New Zealand. I think this could be a potential buy trading opportunity. This is rejecting now, and I'm making now a potential buy trade here. Okay, and this is buy entry in the market, low risk trade again. 53.70 is my stop loss, and I will see this trade could be possibly a scalp swing trade. Why? Because we have New Zealand dollar. Okay, so have in mind that this is very, very, very fast moving pair. So again, the risk should also be adjusted to volatility of the pair. So my stop loss is 53.70. Potential target, final target for the day, if we get momentum spike until then, is 52.80. But still, this is scalp swing trade. So let's see what will happen. 50 to 54.80 potentially. What I want here from this trade is to go up, to break this high here. Daily H4, this will be a signal towards this move, but simply because of the news today, you need to be careful. Let me show you. I will do it immediately. The calendar here. So you need to go to Armor Markets website. And here, yeah, a lot of questions where my analysis is located here. This is where I post the analysis. Okay. So this is where you can actually see my analysis. And of course, here under analytics section, there is calendar. And you can just do it like I do. Go to filter. Only this news is important. And you just reload it. Okay, apply filter. And this is it. Interest rate decision. Okay, that is important. So that is why, okay, this can be a bit risky trade. That is why we trade with lower risk. And this is looking like it might reject to the upside. Okay, so also have in mind that here is a triangle formation. We have a potential triangle here. Neglect this master candle. I will chart this. Okay. Here you have one trend line. You have another trend line. So this triangle definitely needs to be broken to the upside in order for a momentum push in Euro New Zealand. Volatility on this pair is higher than Euro dollar. Have in mind that this pair is not suitable for beginner traders. Final TP is 54.80. 54.80. But I want to see it here first, then I will decide what I will do, at least towards this daily H4. If it breaks it, then potentially we might see a further push to the upside. Okay, so let's see. Okay, next question, can we take a look at GBP dollar again? Here, GBP dollar is rejecting from daily H4, but still this is support. So we need to see what will happen here. A rejection might have another leg to the upside. So follow that closely. You see GBP New Zealand doesn't reject now. It is not rejecting at this point. And have in mind that GBP New Zealand is the one, I mean, it's definitely one of the most volatile pairs in the Forex market. And very occasionally, it is the most volatile pair in Forex market. Look at the range, 205 pips, even higher than GBPN. See, so it's very, very volatile. Okay. The question, my position sell, is it okay, Akbar? Yes, if you want to have a scalp trade, it's good. It still can use some retracement. So this move, you see, you want to pay attention to this level, green one, WH3, it's weekly Camarilla, and this level, 23.6, because in strong uptrend, this can reject to the upside. So let's see. For all of you who are still in dollar CAD trade, I need to give you update because I still see people coming in. My entry was stopped for 11 pips. I made a love entry, 32.79, closed 32.80, so it was 11 pips. Now, for all of you who trade this, you are 18 pips in the profit at this point. And one of the trades that I currently have, 6 pips in a drawdown, it's Euro New Zealand, but my stop is below this level here. Final TP is here, and I might protect my trade around 52, 24, 25 if it doesn't break, and I am still in a profit. Okay, New Zealand dollar. Let's see, New Zealand dollar question. New Zealand dollar. I will not trade you New Zealand dollar after I close my Euro New Zealand trade, simply because we have interest rate decision now, and the price might go either way. If you watch Euro New Zealand chart, easily it can be identified that this pair now is having a consolidation before the interest rate decision. So you see, it's close to the pinnacle, so the price might range and then break up or down. So what I think, simply, I don't think anything about New Zealand dollar until I see what will happen with the interest rate decision. If you want to trade the interest rate decision, you can open 15-minute time frame, and I will show you how to do it. Let's say that the interest rate decision is now, just hypothetically speaking. Let's say that the interest rate decision is now. What I would do then is I would place a trend line to the upside, because 1.75 no rate change can be bullish for New Zealand dollar. So what I think is that if they gave a bullish statement, or if the interest rate decision is exactly as expected, the price might get bullish, and I would place pending buy order here, and I would treat the trade as a scalp trade. So that is what I would do with the New Zealand dollar if the trade happened in the now moment. This would be a buy trade on the interest rate decision. Lower side, I would put also a pending order here below this daily L4 low. So if the price is bearish, it should drop. But as I say, I would treat the trade as a scalp trade, scalp swing. 15, 20 pips, it's enough. So definitely it would be enough. Okay, the pound New Zealand is rejecting at this point, but let me check something. The correlation, we need to check the correlation between Euro New Zealand and pound New Zealand. So we need to open the correlation matrix here. Correlation matrix is one of the best currency strength meters. I really use it a lot. And I would enter Euro New Zealand. And also I would enter pound New Zealand. Save. And yeah, it seems we are having now some movement in the market. Let's see. Let's switch this to 200 bar. Okay. Okay, the movement has started. I have multiple setups, multiple monitors running here. I'm monitoring really market heavily. So let's see, it should update fast. So let's see the correlation. Okay. Correlation says that the pound New Zealand and Euro New Zealand are positive. So I already have Euro New Zealand long, so I wouldn't go with short, although my analysis was correct as usual. Pound New Zealand definitely rejected from the POC zone, definitely, but still, what I have here now is Euro New Zealand long trade setup, and that is why I cannot trade short on pound New Zealand, but you can see the reason why I went long here is rejection from daily H3. Price is making and has been making since yesterday higher highs and higher lows. So that is why I think that the potential uptrend started. And also, it broke through daily H4 today. That might be a signal for a potential up move later. So careful for GBP New Zealand shorts. I think if you traded this, you would have been like 20 pips possibly in the market if you entered, yes, at the top of the POC zone. So you can protect your trade, of course. And dollar CAD trade, again, I close it for 11 pips, but at this point, you see the trade would have been good for 22 pips. I have Euro New Zealand dollar shorts, and at least what I want to see here is up move towards daily H4. If not, I would have a stop loss. Here, if the price breaks it, I would follow it towards the upper zone. If it cannot break it, I would protect my trade, and that would give me potentially 25 pips of profit. Angel is saying the gold party has started. Excellent. I'm glad. I told you that it is a probably long trade. So let's see. And the final setup, guys, that I will give you, but it needs to happen today or later after during Tokyo session, is dollar yen trade. This is what can happen. Sell here, tight stop loss, final TP here. This is positional trade. So counter trend breakout positional trade. So you see Paul now, at least what I want from this trade is at least is 30 pips. But it has potential to make even more because this is positional trade. Positional trade is here. Dollar yen, if it happens. No, I mean 111.05. This is what I will trade if it happens as a breakout positional trade. This trend line is strong. And I think that if it breaks, it will be again trapped into this range with potential to test the lower part of the range. But have in mind, this should happen today or during Tokyo session latest. Tomorrow, we neglect the trade. So only during Tokyo session or later. It starts to reject. Let's see if it can make it lower. I'm not sure, but let's wait. Okay? Okay, Angel is saying I trade according price action trade in school and I'm always good on my trade. Excellent, excellent. Very glad to hear it. So that is all, folks, for today. So still have this Euro New Zealand open. The entry is 54.08. Stop loss is 53.70. Target final is 54.80. I would look what to do with this trade here if it gets to 54.30. And my dollar CAD trade, long trade that I made at the beginning, was stopped for 11 pips of profit. But if you're still in a trade, I think it's time to protect your trade now because the dollar CAD is at resistance, 23 pips from the entry. One more question. Dollar yen forming head and shoulders. Should we sell at the right shoulder? This is lean head and shoulders. So yes, for the biggest risk to reward, you can sell it from this region, keeping stop loss above this high here. Yes, indeed. Thank you for your comments, Angel. Thank you. Thanks a lot. So, I hope to see you again, guys. Have in mind that session recaps are on Monday, live training sessions are on Wednesday, and educational sections and webinars are on Thursday. Of course, one of the reasons is that sometimes on these live trading webinars, we make 10, 15, 20 pips. But you know, guys, it's 10, 11, 15, 20 pips during 45 or 60 minutes of trades. And have in mind that when you do intraday trades, there is still 2 or 3 possibilities to trade during the day. And you don't want to overtrade. Never, ever overtrade. Thanks again. I wish you a great trading day ahead. Let's see what will happen with Euro New Zealand, potentially dollar yen. And talk to you soon, guys. Cheers. Thanks for your comments. Cheers, everyone.